why your adjusted operating margin was so high compared to the rest of the industry? Like, what are you doing right there? Because that is an important metric.
Hey everyone, welcome to our latest TDR Cannabis Exclusive. I'm your host, Shad Dales. Earnings season's pretty much wrapped up. Most reports were in line with what analysts said. However, growth was flat except for a very few companies. Who were those companies? Well, let's welcome in back to the podcast. He's the CEO of MariMed, which trades under the ticker symbol MRMD. Jon Levine, good to see you. How are you, sir?
I'm great, Chad. Nice to see you again. It's great to be back on your podcast, and we're excited to be here.
Loved my time in Boston a couple months ago. I know it's been a couple months. Well, actually, we spoke last month, but that 280E THC party, fun times to say the least. You got a lot of great response to that.
Yeah, and I just wish that you were able to make it, but the message actually did very well getting out there and getting people more
Yeah.
aware. You know, people are still pushing for the safe bank, but now people are really looking at it differently, saying, "Wait a minute, it makes more sense to change the code on the statute of the cannabis from a 1 to a 3 or 4 or
Yeah.
deregulate altogether."
Yeah. Did you get a lot of support and feedback from it is people from the industry?
I got great feedback from
Did
the
you?
industry.
It's awesome.
I mean, all the top guys that I know have been sending me great move, like the message, and then I'm seeing a lot of other people going out with similar messages. So
Yeah.
it's been a good message to the industry.
Trailblazers. Benjamin A. Smith, lead financial writer. Good to see you, sir.
Great to be here. Great to be back on with John and talk about the business.
Yeah, let's talk about this business. So, as I said off the top, earnings season's pretty much wrapped up. When we look at your share price, it's gone through some challenging times the last couple of weeks, but there's a lot of misconceptions because when we look at your earnings reports compared to other peers in the industry, this earnings report was actually good, don't you think? And what's your response to, like, I guess, to our viewers that you want to reiterate here today, knowing that, look, all is fine and we're heading in the right direction. So let's clear up any questions that some people may have.
Yeah, I mean, I think the first thing is, as we were talking earlier about, the whole financial market for cannabis, all stocks have decreased much larger than us.
Yeah.
And we were one of the last ones to have this big adjustment over the last few weeks. But it basically is that we're equal to everybody else in the industry in terms of where we have reduced down to. But we have the strongest earnings out of all. I mean, our revenue is up, our gross margins are up, and our year over year and quarter over quarter is well above the average of the market. And I just think that people are missing what's going on. We are putting this money into the growth of the company, and we keep showing everybody that we're doing what we've said in growing the company, with our revenues going up for the 14th consecutive quarter over quarter. And that's a very strong message.
Yeah.
We don't see a slowdown in that because of the fact that we put all this money in to building out these projects that we started. Unfortunately, as people have seen, there's delays,
Yep.
whether it's the state delays or supply chain delays. I mean, everybody in every industry is feeling supply chain issues, no matter where you are. That doesn't make a difference. But then to top it out, states like Massachusetts delayed our opening here in Massachusetts of Beverly by months and months, which was horrible. We've been trying to get our adult use in Quincy, not an easy task.
Mm-hmm.
So those are the things that do delay what we had in our numbers to show everybody. But it's delays that are out of our control. But these are positives because when we get them open, they open up and they generate the revenue that we had projected. And that's the good news. It will increase our revenue
Yeah, of
quarter over
course.
quarter, year over year, continually. So
Yeah.
we're going to plan on still being the leaders in the industry.
Yeah. Ben, as I said off the top, growth seemed to be pretty flat that we've discussed in a couple of our podcasts this week, but we were highlighted some key stats and numbers through some of the MariMed team earlier this week. And I know there's some of the things that you wanted to touch on and go over with John, but maybe share some of the numbers that stood out to you and maybe, ask or, some of the topics pertaining to growth as to what MariMed was able to achieve.
Yeah, I think one of the things that stood out to me was the adjusted operating margin, which for MariMed stood at 14% in Q2 versus the industry average of -7. This metric indicates that the company is actively managing its operating costs and generating strong profitability from the business, from the core business. So, can you sort of speak to that, John? Why your adjusted operating margin was so high compared to the rest of the industry? Like, what are you doing right there? Because that is an important metric.
Well, I mean, as we've always stated, we're very oriented on making sure that we watch the business very diligently to make sure our margins are always in line. Yeah, we've seen some reduction in the margins, but we continue to keep our margins higher than most, because of the fact that we're adding in more mix.
Yeah.
One of the biggest mix changes is that we went from a heavy retail ish sales to a heavier or getting closer in the wholesale. Our wholesale is up quite a bit now with Maryland coming on board. The good news is the bigger margins are in wholesale, and we're about to start our Illinois wholesale of our brands and everything in that state, which will help build that margin even more.
Here
Yeah,
comes
just to follow up on that, I noticed too. That's another thing I noticed is that your your retail revenue mix was at 67% or about two thirds versus the industry average of 79%. And that means you're a little bit more, tells me that you're a little bit more diversified in terms of your product mix. So I guess that really is helping you at this point and making you a little bit less dependent on, the retail consumer at the dispensary.
Yeah, as we've always said, I mean, for the last 2, 3 years, we've said that we wanted to become vertical in all the states that we're in,
right.
and that's what's happening, is that we've completely become vertical in Massachusetts, Maryland, and now it's gonna be Illinois. We're bringing production into the Missouri market. That will be another big positive for us.
Yeah.
The margins are better in the wholesale business if you can manufacture your products for the right value, and that's what we've done. We've done it successfully for years, and we're going to continue that.
Yeah. I want to talk about CapEx spending. We've noticed that the big MSOs have essentially stopped CapEx spending while you guys were picking up the pace of investment significantly. When I look at this, in fact, I believe MariMed spent twice the amount of CapEx as a percent of sales than the industry. So explain why that is.
Well, as we said, our goal was to go out and accelerate our build outs and our use of the cash that we just borrowed.
Yeah.
That cash was not to go out and continue growth through mergers and acquisitions. We used it to do the closings of the acquisitions that we had in place. And now we have to finish the construction and the build outs of those facilities, such as the Illinois Mount Vernon cultivation and processing. That will generate cash flow this year, which will be a big increase for us on those margins because that's wholesale. That will make us fully vertical in the state of Illinois. But bigger yet, it brings our brands. Our brands are going back into
Smart.
Illinois. Everybody's begging us to get the Betty's Eddies back.
Here
Well, guess
comes
what?
Betty's Eddies.
They're back.
They're back. I
Yes, sir.
know, hyped up in Illinois or what? Like, are a lot of people aware that the product is coming back?
We have started to campaign that the product's on its way back, and we're going to do a big campaign probably in the next 30 days, telling people that we're getting closer and closer to getting it on the shelves of the market, and it's going to be real exciting because as I've said for a year plus now, those people have been begging us to get back into the Illinois market. We were number one in Illinois for 2 years
Wow.
with our partner GTI.
GTI.
When that went away, the people were desperate to get that back. Now we're coming back, and I really think that that's going to be a way to get the market really excited to have that coming back. But then they're going to realize, hey, wait a minute, these guys got great other brands, Bubbies, Vibations. These are great opportunities for us to expand our branded products into that state. And if successful, it will basically help our margins even more.
Yeah. Go
Now,
ahead,
John,
Ben.
maybe speak to the Maryland market a little bit. Obviously, it's a new adult use market. It opened up July 1st. We've been hearing a lot of things that sales have been very successful there. Not for everyone really in the industry. So, can you speak to how the operations are going there, and if you're excited about that market going forward?
Excited? I probably would have to say that's an understatement.
Yeah,
We're ecstatic. I mean, that market really has been wonderful,
uh-huh.
and it's been great in both the wholesale and the retail. Our retail store is doing great, and we're hopeful to add to the retail portfolio. But the bigger piece is that our brands, our flower, are basically high demand right now.
Yeah.
They basically have very little inventory that we can ship, but we produce as fast as we can. We're not running out, but we're very close to tight inventory levels, and we're in the process of finishing our build out there. And that's what part of the money was used for, was to expand our operations in states that we're in so that we can handle the demand. Maryland was one that we were a little late starting that expansion for multiple of reasons, but we got the money, we've got it going, and we're a few months away, and that will start generating more flower growth. We already have the GMP kitchen, which allowed us to get back into the high dosed edibles, which are still in high demand with the medical program there. So we're excited with what we've done in Maryland, and there's a big upside still to come in Maryland.
So when I hear a lot of the times you're speaking, it's not getting too far ahead of yourself. Complete what you've started and focus on basically, the infrastructure of brands and locations that you've already invested in. Do you find it's been the complete opposite when you look at other companies in the space? Because it appears so, especially in the situation we're in right now pertaining to the overall industry.
Well, if you go back a few years, everybody went out, raised money on the Canadian market, have borrowed a lot of money from the in banking industry, and they have ridiculously high rates, and all
Yeah.
that money is coming due. And all the problem is that rates are going up.
Yeah.
So people are going to have a lot of
Think
issues
about
when
that.
they
Yeah.
start refinancing. So one thing that we've always done has been very conservative and watched our strong balance sheet become stronger by not over borrowing, not over leveraging, and doing the right thing. Our balance sheet is still one of the, if not the strongest in the industry, and our debt is good, healthy debt.
Yep.
And we always look for better opportunities to strengthen our balance sheet however we can.
Yep.
So it's not that we've stopped just because we've got the money that we need, but the goal is to be continue to be positive cash flow and positive earnings. So those are the two things that will help keep our balance sheet stronger than others. And the fact that we've got years before we have to worry about the refinancing of our debt.
Yep.
A lot of people are going out looking at refinancing right now, and it's not a very good time.
Real
I
estate is your thing,
feel
right?
sorry for them.
You know real estate, right?
I do. I'm still still a big real estate dabbler, and I understand how our real estate is helping us be able to do what we're doing.
So if I were to, let's face it, common sense, right opportunity presents itself. You guys are going to be in a position to expand, is from what I'm gathering, knowing the situation you're in now, correct?
Yes,
Yeah.
we have the balance sheet to go out and
Yeah.
do more. We just have to find the right deals to do it. The fact is that a lot of people still feel the value of their businesses are worth a lot more than they truly are. We have seen our patience is paying off.
Yeah.
We have companies that we've looked at a year ago that are coming back that haven't sold, and that their price was 4 times higher than what they're looking for today. So there's opportunities out there if we're patient. We always want to buy the right value, and we were buying licenses that weren't open yet and building them out so that they were built to our standards.
Yeah.
We're now looking a little bit of the opposite. We're looking at opportunities that are built out, that have good facilities that could be easily manipulated or changed to go into our SOPs and be of value to us right away, so that we pick up that value for today versus 3 to 12 months from now.
Patience is what we've discussed a lot, right, Ben?
Yeah, exactly. So perhaps it sounds to me like another Quincy acquisition might be in the cards when the timing's right, John?
Absolutely. I mean, we've got some exciting opportunities that we're looking at. It just takes a lot of time to get these deals done. Like I said, people still think that they're worth a lot of more money than they truly are, but they have to be accretive to us. We have
Yeah.
to be the right move for our shareholders.
Mm-hmm.
And I know people are a little bit antsy right now with the stock market being down, but that's not just in our industry, it's in every industry.
Yeah.
The market's not very strong.
Yeah.
However, the industry in whole is a major disaster on the stock market, as people are fearful of going into cannabis at this time.
Yeah. Well, look, we understand this is a lot of retail buyers within this industry right now. We still try to educate. It's not investment advice that we provide, but there's going to become a time where the market's not going to perform just how the big MSOs perform. So what is the message if you are sitting in front of a group of investors right now that wants to basically communicate to them that, look, we are doing what we're doing. The numbers don't lie. We're obviously on the right path. What's the clear message that you want to indicate to them that all is fine?
Well, to the everyday trader that is the day traders, they're looking at our financials and they're not understanding many things. One is we are delivering on what we've said we would deliver on. That is the biggest piece that they have to understand. As you said, they're not understanding how we're doing against the market or the peers. They
Yeah.
look at our stock going down. Everybody in the cannabis industry has seen, from the biggest MSO to the smallest MSOs, have seen a huge decrease in their stock price. And one question we constantly get is that our share count is going up. Our share count is not going up.
Yeah.
Our fully diluted has basically gone down from last quarter to this quarter. However, our common stock went up only because of the fact that our preferred shareholders converted some of their shares into common stock. And that just makes it look like we've issued more shares, but we didn't. It not shares going out for the employee stock program. People have asked about a buyback program. It's not the right use of our money. Several MSOs have tried this in the past. Acreage, Air, Cureleaf have tried a buyback program. Guess what?
Didn't work
Their
out
stock
well.
went down by 90%. Not a good move. I don't want to put us at risk of a buyback and have the stock still go down. I'm the largest shareholder, but I put a lot of time, effort, and personal guarantees on the line. Bob and I did not take pay for several years
Yeah.
to build this company to where it is. It's only been in the last few years that we've taken any type of a salary. For me to put more money in to buying shares to show the market our support is probably not the right move. It just make me a bigger shareholder and take us back to where people used to think that we were too much insider and not enough of the float of
Yeah.
the outside. I think we have a good balance right now, and the employee stock program just gives more of the employees the incentive to make sure our growth is still there. It's not a bad thing to give the employees an incentive to help us reach our goals of continued growth, margin, and EBITDA. EBITDA has been a little down, but that's because of our growth.
Right.
Our growth has taken us a little bit, so we have to do some upfront cost carry, which does hurt our margins too. But it will all turn in the next year so that we can show everybody that we've taken the time to build this right. We may not be the largest, but we're still one of the best in terms of the growth that we're going to show over the next 12 to 24 months.
There were some staggering stats when it came to growth. I don't like some companies down 20, 30, 50% year over year. You guys were up close to 10%. If I have the numbers in front of me, I don't know off the top of my head the exact numbers, but you brought up the whole point of like the share buyback. We've talked about this earlier this week, Ben, on our podcast, that how many times have we seen this song and dance where stock gets hit, executives come in and do a share buyback and it never works. But interesting feedback that you've outlined, Jon, to differentiate and explain what you guys are doing versus historically how these things don't end up working out.
John, I'm glad
Yeah,
you explained that too, as well, because a lot of investors like to see the optics of a buyback, not realizing that A, the executives are already concentrated, and B, like you said, Air Wellness did a buyback around the $18 level, and it went to $1 US, right? Like a lot of these times, it doesn't really have that effect, but investors just want to see it, almost like they need endorsement that you're into the company, but you're already vested in the company, right? So it's really
oh,
not a good use of your capital.
we're invested in the company. I still have personal signatures for the corporation on the books where I stand behind what I believe in. I don't mind that my name is a guarantor signer for some of these
Yeah.
loans because the fact is, I do believe what we're doing is best for the stockholders and for the business. We want to be a leader in the industry. I think that the stats that Ben you were talking about, how we're a leader in terms of our quarter over quarter and year over year in almost every category, this is just showing why. I mean,
Yeah.
we're taking our time and doing it right. I apologize to the shareholders that are upset that it's not moving fast enough, but I don't have control over supply chain issues or the state regulators. So we do our best and we try to do it right. Why? Because we care about the stock value. Our shares will come back because we are one of the strongest on the balance sheet and on the income statement compared to our peers.
Here's a stat that I think people should take home. Year over year basis, MariMed grew revenue 11%, while the big MSOs actually declined. So you have people declining as far as the big MSOs seem to dictate how the industry performs. But we've always said, and we continue to say this on our podcast, that some of the tier two MSOs are showing some really strong growth. So you've got big MSOs in decline, and you guys grew double digits, which is why we said off the top this was a good earnings report, right?
I think it's a wonderful earnings report. And now that everybody's reported, we're seeing why it's even better than we thought.
Yeah,
You know, people being the first is not always the best. And we were the first to report. You know, we've put our controls in place to make sure that our margins and everything else are there. I mean, people have seen us spend money to build the company, but we built for the future. We don't have to add a lot of staff. You know, a lot of MSOs are actually cutting back, leaving states because of the fact that they have to cut their expenses to get back in line.
yeah,
I mean, a lot of people, MSOs, have left Massachusetts,
yeah.
and it's a shame to see them go, but we're staying. We believe that this is a great market, and we're going to continue to grow here.
Scaling's not easy, right?
No, it's not.
EBITDA margins, as you said, they were below industry average at 17% versus 22, but you said you believe that your revenue will ramp up meaningfully in the next 2 quarters, with spending generally in line with Q2. So you should see, I should more or less say, your margins increase significantly is what you're thinking, correct?
In the long term, we will see our EBITDA margins increase
Yeah,
as we open our facilities and get these into full operation. It's a patience thing that unfortunately most people don't have. But if you look at all the other stats, we're doing everything right. As you said, our growth is still gigantic compared to the competitors,
yeah,
but we're doing the right thing. We're making sure that it doesn't affect our balance sheet. If you look at a lot of our peers' balance sheets, there's a lot of them that have great concern. Their
yeah,
debt's coming due in the
yeah.
next 12 to 14 months, and interest rates are going the wrong direction.
So
So,
growth opportunity and potentially buying assets for pennies on the dollars for people that are patient is from what I'm seeing trending wise. Some of the companies that we've seen become patient, there's some big lucrative opportunities on the horizon for them. But anyways, listen, appreciate the feedback, appreciate the open and honesty as to what you're doing. One thing I do have to question though is that what are your Patriots doing signing Ezekiel Elliott?
hey, that's a Belichick special. Ezekiel is going to be our goal line boy, and people are going to think we're going to ram the ball in with him.
Oh,
He'll be going on the outs, and they're going to just toss a pass to him or somebody else. It's going to be a great move. He's
great move.
always these older people and made them into heroes. I mean, I'm looking forward to seeing Ezekiel.
You know what?
But,
I love the AFC East now. It used to be the
It's
Patriots every
stacked.
year. They used to, it was money that they were going to come on top. Now it's like probably the most competitive division in football. So you got the
well,
Jets, the
I got to
Dolphins, the
say, the
Bills.
two East divisions in both the NFC and the AFC,
I know.
two very strong divisions, which is going to
Strong
be great to see.
divisions. Okay, listen, I know we were in Boston back in June. Ryan's house, backyard, you basically walk through a forest, and on the other side is Gillette Stadium. So we have got to get out there this fall. That would be a blast.
Yes, it would be. I hope you can make it up for one of the games.
Have you gone and like done a little tailgating at his place on a Sunday and walked over to the game? Has that ever happened?
I have not done any tailgating at his house, but I know that it's close enough that we could walk there. He actually went to the Revolution game a couple of weeks ago with his kids, and they didn't even take the car; they walked.
Too
So,
funny. He had some interesting stories with some buddies. He said we were walking back. It was like a scene of from a scene from Walking from the Dead. Seeing these guys walk through a forest, have a few many drinks, maybe a few edibles, but needless to say, what a location. But 20 days, football is back. Can't wait to get it going. But listen, more importantly, um, I know a lot of people are uneasy about this industry for an investment opportunity, but let's face it, this is a long-term play, and patience, patience, patience is key, right?
yes, and I hope our investors that are listening understand a little bit better about the uh, messages that we're trying to put out there
Yeah.
and have a better understanding about our earnings compared to the rest of the industry. but also our share count. I know that that was a concern of some, and it's not the right thing to go in and do the share buyback. Using our funds to grow the business is more important. Our investors just need to be patient. You're not going to see us buy huge MSOs, but we're going to keep buying and growing so that we're fully vertical in as many states as we possibly can.
It's good. Great explanation and clarification. So I hope people get a lot out of this. Ben, appreciate your time. John, keep in touch, and look forward to catching up with you next month in Chicago at the Benzinga Conference.
Thank you, guys. I appreciate it.
All right.
Thanks,
Thanks, John.
Have a good day.
You too. So what'd you all think of the interview? Did you like what we recorded with our guests? Then leave a comment below and let us know what you thought of it. And if there's any more questions you want us to ask, as usual, share this video with your network, click on that bell for all notifications, and most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.